We're going to do a brief video on Bed Bath & Beyond. That's BBBY Stock. And we're taking a look at a one-day chart. It's got three moving averages on it. Let's spread it out so we can take a look. The green is a 5-day, the red is a 20-day, and the blue is a 200-day moving average. And if we go back here a little bit to the beginning, we can take a look and see what's going on with this stock. We'll start back here around August of 20. We can see several things right off the bat jump out at us. In August and 20, you can see it at the bottom here, at the very bottom, down in this area, you'll see the volume. And it's also reflected up here in this corner. If we take a look, when we cross the 200-day moving average here, our volume was roughly 5 million shares a day. Sometimes it would jump up higher, sometimes lower, but roughly around 5 million shares a day. If we spread this out, we can see that the market closed above the 200-day moving average, and the red is a 20-day. That and the 5-day got above the 200, and we started our little bit of rally here. Here's the first place where we had major issues. This is 83 million shares on this particular day. This is a daily chart, and you can see the gap here of about, I think it was about $3, $3 or so. This market gapped up, but that was the first major issue that you could have identified that something was going on with this stock that was highly unusual. So again, we're above the 200-day. The 20 and 5-day moving averages are behaving normally here, and then we get into this flat sideways market all the way up until about January of 21. You can see that in late December and into early January, even late January, we had massive issues with the volume. Volume jumped up here to 13 million, 19 million, 37 million, and then finally this ridiculously high volume of 89 million and 90 million. You can see that corresponded with a parabolic move in the market to the upside. A little bit of gapping going on here. Parabolic moves are almost always just like rockets. They go up and they come back down, and you can see this parabolic move collapsed within a week, and not only broke but stayed below the 20-day moving average from about February to the end of February, early February to the end of February. We were below the 20-day moving average. So this is when this stock started to trade really weird. The increases in volume obviously was very unusual and caused these price spikes, but this type of trading through here from February all the way out here to March is a very weird look for a chart. You can see essentially it was oscillating right around the $28 range, but I wouldn't even really call it an oscillation. It was more like it was stuck there, because an oscillation you would expect the price to go 33 down to 26, 33, 26, but that's not what we saw here. We basically saw a fairly tight range. It got to 33 here, and it was down to 22-ish, roughly, actually about 24-ish right here. But in general, this stock was what I would consider to be flat, and you can see the moving averages eventually went flat on it. So this is a very unusual way for a stock to trade when that stock is a $30 stock. You normally see much more volatility up and down in a range from $35 to $25, especially coming after a huge spike in the price to 56. So we move along now, we start to see another bump in the volume. This wasn't huge, 23 million shares, but it had a gap. And then we come to May of 21, and again we see volumes going up until finally we get this 109 million share day. Again, another parabolic move. We're still all above the 200-day moving average. We get a parabolic move up to about 44-ish, and a reasonably immediate sell-off right back down to 30, and then eventually a sell-off down here to about 27. We get another volume spike, about 50 million, a spike in price to about 40, and back down again. We now see what's really a traditional way of a market oscillating through $28. You can see it's going up and down. It's normal. You see the 5-day moving average oscillating. You can see the 20-day rolling over, and eventually both the 20 and the 5-day moving averages and the price close below the 200-day moving average. This little period of time here up until about August or so is normal, and even right to about here till October of 21, fairly normal trading. The gap is not a good sign to the downside, but this stock has gaps, and that's just the way it is. But what's very unusual is this little section right here. From October to beginning of November, this is extremely flat, and you wouldn't expect to see a sideways market like this that flat. You would expect it to trade like this, up and down in a range, searching for a bottom. This was a very strange move on relatively low volume. All of a sudden, our volume picked up to 45 million, and then 104 million, and again we're back to gapping, parabolic moves to the upside, but notably no close above the 200-day moving average. This, as could be expected, fell back because it's a parabolic move. What goes up must come back down, and then you see eventually a distribution, and it comes all the way back down again to the let's call it the $12 to $14 range, but it's sideways. This price movement all through here and all the way down through, let's call it from November all the way down through January-ish, and then to about this point, this normal price movement. I don't see anything wrong with this price movement. This is a distribution down here, and accumulation is back and forth. People have been beat up, but they're not exhausted. They're not completely frazzled like they were earlier, and this is normal stock behavior. But again, we go nuts again. We're 105 million shares out of the blue. The day before, 2.7 million, then 105 million shares. Notably, the stock rallies. It breaks the 200-day moving average, gets to 30 bucks, but does not close below above the 200-day moving average. We see another spike, a significant number of closes above the 200-day moving average, but there's nothing really behind it. There's no volume. As you can see, the volume drops down here to 3 million, even lower here after the spike, 2 million, 2.6 million, and we get this crossover first to the 5 below the 20, and then the 20 below the 200, and as you can see, we just essentially, our volatility dries up. It's in a standard bear market, and we come to this ridiculous little spot right here. From about July 22 until just a few days ago, early August, first week in August, we just had a ridiculously, almost penny stock-like $5 price that showed really nothing. It showed complete indecision on both the buy and the short sides. We then had a crossover of the 5 above the 20, and we started huge volume pickup. This was a 124 million day right here on the 8th of August, 124 million shares. We then went to 395 million shares yesterday, and again you see a parabolic spike, the 20 days coming up, the 5 days up, and you see this parabolic spike that's closed above the 200-day moving average. Now, who knows what's going to happen? It's almost impossible to predict what's going to happen with this stock in the long term. There's several things. Almost certainly the stock's going to come back down here to the $14, $15 range, probably in late August, early September. It's probably going to come back down here because it's a parabolic move, and we can expect it to come back down. Does that mean it's going to come down immediately? No, definitely not. You can get in serious trouble shorting this stock. You can also make a lot of money shorting it. You can get in serious trouble buying this stock. You can also make a lot of money buying this stock. The point of it is it's completely unpredictable. But in general, a technical move like this, you would expect it to sell off at least a large percentage of the times down here because it's a parabolic move. You would expect parabolic moves to sell off, and probably in this case, for opinion purposes only, for entertainment purposes only, it's my opinion, in this $14 range, late August, early September. After that, it's hard to say what it would do, but my guess is it's probably going to rally back up to the 20-ish or so range, and then back down to the 12 or so range, and probably right around here at the end of September or maybe even early October. That's my best guess as to what's going on with the stock right at the moment. This stock appears to be trading like a hybrid penny stock and a heavily traded retail stock. It does not appear to be traded like a stock heavily involved by trading by institutions, although who knows? I'm just guessing. It's all my opinion, but it definitely looks like this stock has a lot of retail involvement in it. It's not bad or good. It just looks that way to me. The stock is not trading from a technical perspective like you would normally expect it to look, and the volume spikes are just really, really strange. So that's where we are on this stock. RBAM Research puts out algorithmic entry prices for stocks like this every day. I do not think, I've checked, and I do not think we cover Bed Bath & Beyond. But to give you an idea of what we do, every day before 7 a.m., we publish these entry prices for stocks. We have 190 plus stocks. We have 1-day hold, 5-day hold, 20-day hold. That basically means buy today, close out by end of trading tomorrow, end of trading 5 days, end of trading 20 days. These are trading days, not calendar days, and it gives you entry prices. Now these are all just for entertainment purposes only. You never use these as your actual indicator. You use them to back up whatever you're thinking of doing and to give you some trading ideas. These are all for entertainment purposes only. But as you can see, Tesla today, the prices are here, Ford Motor Company, and so forth down here. Usually most of these will be filled. Zero means there's no opinion or no output from the algorithm for that particular stock that day. And that's why you see a lot of zeros here today. Usually probably 3 days a week, 90% of these will be filled with entry prices. So that's what RBAM Research does. You can get all these absolutely free from rbamresearch.com. They're published every morning during the week by 7 a.m. We cover 190 stocks, long onlys. We cover shorts and longs for both forex, crypto, and the most liquid S&P 500s. You can get them all for free, absolutely no credit card required, at rbamresearch.com. There's a link below in the description. If you like this video, please click the like button. If you want to subscribe, please do that. If you can give us some tips about how to improve these videos, we'd love to hear. Please leave us a comment in the comment section below. And keep in mind, everything that we've discussed here is for entertainment purposes only. It's all our opinion, and you definitely trade at your own risk.